This is the More Doors Podcast, episode number 61. We have an amazing guest today that's going to help us fuse together real estate, entrepreneurship, and technology. We'll be back with our guest and my amazingly handsome co-host right after this. All right, everybody, welcome back. Episode 61 of the Big More Doors Podcast. What's happening, boys?
Oh, same old, brother. It's good to see that number, that 6. It was a 5. It was a 4. We're cruising along.
That's what happens when you count higher.
Just 8 more, Brian. That's all you need. 8 more.
8 more. Oh, I see what you're saying. Yep. That's a
little teenage.
Then you get to 70. Yes. And you busted out the vest today. I had mine yesterday.
You did?
Yeah. So you busted out the vest today. Should have just synced up.
I know.
I mean, I'm the only one wearing the uniform.
I know.
Is that a Tesla?
I thought it would be weird though.
This is Telluride.
Yeah.
Oh. Mm-hmm.
Telluride was before Tesla.
Okay.
Yeah.
Those are sick. What do those cost? $400 in Telluride?
Yeah. In Telluride money.
Yeah.
Telluride money is a lot more expensive than the US dollar.
You just slap a Telluride logo on an Under Armour thing, you increase the price by 300%.
Exactly.
They're really comfortable.
Yeah.
Now.
We're going to have to invest in more apartments because I want to go to Telluride a lot. I'd love to live there.
Dude, Telluride's so much fun. Have you heard my Telluride story?
I think I have.
He was COVID patient number 1 in Telluride.
Yes.
They call you patient 0, guys, not patient 1. I think I was patient 0.
Really?
Yeah. We had no idea what was wrong with me.
No, nothing.
That was bad.
Even the people
was
at the
like that
hospital.
movie Outbreak where they had to go catch some like random animal in a forest and extract its blood to give you the vaccine?
Yes.
When COVID first came out, like Netflix had a whole bunch of epidemic type movies on. They had a whole playlist during lockdown, and Outbreak was one of them. I was like, this is a weird, perverse way to approach this as a media company. Like, we're all going through a pandemic and lockdown. You're like, why don't you just watch movies about it? Yeah. It's super weird.
Unbelievable.
Irregardless.
Yes.
Yeah. If you want to have a media company, you should go to Tour Studios. TourStudios.com. You can start a podcast just like this. You can talk about anything you want about being patient 0. Or you can start a fun podcast just like the More Doors one here. And if you need to invest money, right, into years coming up, you got to defer some of those taxes, right? You want to be able to build that wealth and get that residual income coming in. Just go over to deepbluere.com. Sign up for that newsletter there. Once you do, you're probably going to get a call or text message or an email from me. One of those 3. Mm-hmm. We'll do a call just to learn more about each other and see if maybe you could be a good candidate investing in one of our opportunities that we have coming up. So go to deepbluere.com. And you want some swag like what Buchowski's got over there. He's got that nice deep blue shirt. And, where's the hat?
I didn't wear the hat today. I was having a good hair day.
Yeah. I don't think
you could do the hat and the shirt at the same time.
No.
I mean, you totally could.
You look like a nerd.
No, you look like Garth from Wayne's World, where he's doing he's got all the Reebok and Pepsi stuff.
But if you want some of that good swag, all you got to do is go leave us a 5-star review, screenshot it, and send it up to us at deepbluere.com. And we'll get your information. We'll send you a hat or maybe a Buchowski shirt over there.
I will literally give you the shirt off my back for a 5-star review.
That's the type of dude you are.
That's it.
A 5-star
Selfless excellence.
During this episode, we're going to do it live. Or we're not live.
No.
Regardless. All right, boys, let's get to it. I am really, really, really excited today. We've got a phenomenal guest and one that is very, very, very prominent, not only in the industry, but like, this is our first big CEO we're having on. I'm super, super, super excited. This is a huge get. Good job, Buchowski.
I mean, it's all about who you know.
It's all about who you know. Well,
I saw that in Step Brothers.
Well, I am very excited to officially meet. So now we all know Mr. Kevin Heras, the CEO of InvestNext. Brother, thank you so much for taking the time and welcome.
Thank you guys for having me on. And quite flattered at the intro. I don't know that I can live up to. Live up to it, but really appreciate it. Humble.
Oh man, you'll have no problem whatsoever. But like I said before, I don't love to do anybody's background or intros for them. So if you don't mind, kind of give us a little bit about you, your journey, InvestNext, just the whole spiel.
Yeah, for sure. I'll start. I guess I'll start start from the personal standpoint, I always, I guess I always think about my heritage. I was born and raised in Spain. Came to the U.S. when I was a kid. And of all places, actually ended up in northern Michigan, kind of the Great Lakes region. And I basically consider myself a northern Michigander. I still hold on to my Spanish roots. Half my family is from Spain, but my mom's side is very much the core there. And so, grew up in a small town, and ultimately went off to study at Michigan Tech. So it's a small little engineering school in the region. And I guess more into my journey and sort of into my professional journey would have been, well, I bring up Michigan Tech because that was actually core to that. So towards the back half of my college experience, I had the opportunity to be one of the first early team members at Handshake. So Handshake, for anyone's context, it's a unicorn out in Silicon Valley. Basically the LinkedIn for college students. But back then it was very much dorm room founded, a startup. It was myself, the three founders. And it was just sort of this, kind of wild ride of building this software, going to market, selling to institutions, EDU, that whole ecosystem that was, again, think of it as young kids trying to enter a space that's very well entrenched. And so, that was just an incredible experience to the extent that, went off, the company raised its first round of funding, and that's what ultimately took them out to Silicon Valley. And really around that time, I had a personal sort of inflection point of, there's a very real path where I'm either going to graduate or I'm not. And that might be, maybe committing time into really helping build this company. And I chose to graduate, and that was primarily driven by the fact that I made that commitment to myself, and I'd be the first member of my family to do so, and that was just non-negotiable. So parted ways with the team there, all on good terms. Just still keep in touch even to this point. But that's a lot of where my own personal journey started, where I graduated and did sort of what you might call the responsible thing. Got my could call it first corporate job out of college, which actually is what took me to Detroit, which is now home for me, and that's ultimately where I've planted roots, got married, etc. But I worked, so did kind of the corporate track for a while. Worked in ERP implementations, sort of technology implementations at the enterprise level. It was a consulting firm that I worked at, but worked with everything from pharmaceutical companies to real estate operators to cross financial services. So just learned a ton about different industries, and as an entry point was very much technology touching that. So super interesting work, but I would say the entire time I was very 3+ years into that career, I was very sort of anxious to build something, and certainly Handshake had that impact on me. That experience to say, this is what you can do with software, or what you can build in technology can have a meaningful impact. And so just that was a lot of what was driving me sort of at the core. And that kind of leads a little bit into InvestNext, where I met serendipitously, I'd say, my now co-founder, Michael Giese. And Michael was at a similar stage in his career. We had, he just graduated from the University of Michigan, computer science. And at the time he was working on this side project that was aimed at helping his family's private real estate investment trust manage and automate their back office, as well as manage their portfolio of investors, which numbered in the thousands across, multi-billion-dollar asset base. And so this is very much the pre-Genesis of InvestNext rolled out to the whole investor base. And we started getting, call it, knocks on the door to say, hey, this is great. Even a lot of the LPs, they were operators, fund managers, etc. And they were asking, how do we get our hands on it? And so very much the light bulb moment for us is as founders to say, hey, this is a very real problem. This is more than just sort of a single sort of issue that we're dealing with. There's an entire industry that needs this. And so we went into it. That would have been early 2017. And, call it late nights, weekends, really understanding the core ecosystem, to the extent that at the end of 2017, we were fully full-time. I mean, and then for the next 3 years, I mean, we built the business up. We bootstrapped the company, which means that, I mean, we got to profitability, and eventually we went on to the sort of the venture track where we raised some venture capital, which really helped us scale our operations up. And then, yeah, to that point is, as they say, the rest is history. I mean, to date, we've now have over 1,600 GPs on the platform, over 70,000 active investors active on the platform, and then across 15 billion in transactions that we've facilitated alone just even in recent years. So, anyways, that's a little background. I certainly can dig in deeper there, but kind of a history of myself and how it's gotten me to this point.
Yeah, no, I love that. I know that Booch wants to jump in as well, but I would, the first kind of point where I want to jump in, that's an amazing story. And the part that really stuck out to me is the genesis of InvestNext was really a solution, more of an internal solution for a private office. And then the LPs, a lot of them who happen to be operators on their own deals, were like, this is fantastic. This is a fantastic solution. How do I get this and implement this in my business? What did that moment, that aha moment, look like for you when you realized we have a really great solution that fills a need in the market? And we have to make a commitment if we're going to go build this thing. It's an amazing opportunity, and we got to go all in if we're going to build it. What was that decision-making process like for you?
Yeah, it's a great question. I think, it came from a place of being sort of product people to begin with. So, and then, call it engineering background, product. And I mean, for us at the very beginning, it started off as, we're looking at these very practical problems that we're seeing in front of us. I mean, the entire ecosystem is running on, basically Excel, and, the things are being managed across a hodgepodge of systems, third-party vendors. And so the thing though is obvious to us is like, this is very broken. I mean, we can build technology to automate and support these back offices. So that was the point of it. Started as a very practical identification of, we can solve all of these problems, and very clearly. Right now, as you get into the ecosystem, you now start to learn about more systemic problems that you can address. And I mean that, then you start to interact with the other stakeholders around the operators and the GPs to say that, even as an investor, for instance, you're often faced with the fact that you're investing across a whole wide spread of GPs, and each one of them may have their various systems of record and how you transact capital in. And so the status quo is, in order for you to transact an investment, is you have to build a lot of trust with these GPs or these sponsors. And so that's just kind of generally like very inefficient, right? And so our aim was to build inherent trust in the transaction, to say that even as an investor that's investing across all the GPs in our platform, you already understand that, the transaction is exactly the same from one sponsor to the next. And so that made the lives easier for the investors. It made the lives a lot easier for the sponsors. And so, just kind of giving you an example of the roadmap that, again, at day one, it started with some very practical pieces that we can very clearly solve. And ultimately, we got exposed to the much broader ecosystem at the core of real estate. So, I mean, that, to that point.
So as you kind of pull the thread on the sweater, Kevin, is it fair to say that the more familiar you get with the GPs, their responsibility to satisfy reporting requirements, distributions, like really kind of make the LPs happy and take care of the LPs, that, as you learn more from a product perspective, that's helped you create a more sticky solution, and really kind of become more of a, not just a not nice to have, but a need to have?
Yeah, I mean, that's exactly it, right? It is very much, we've very much placed ourselves as supportive to our client base, right? And to that point, I mean, we've very much become the infrastructure to support how our sponsors are raising and managing capital across the ecosystem. So you go from nice to have to very much core to the strategy of the business, right? And so that's, I mean, that aligns a lot of with how we've thought about how we deliver even product to our clients. And so even from day one, I mean, we were very transparent about how we can come into the conversation with and where do we support, where can we fit in versus where we don't fit in, right? And we were very upfront with those conversations even early on. And that's to the extent that we had a very clear understanding of what problems we were going to solve over the long term. And then at the same time, taking in the feedback to really automate the daily workflows, but also the things that are strategically important to our clients. And so it kind of sounds cliche, right, to say that we are partners to our clients, but the partnership was very much kind of twofold, where we're building very core systems and processes for our clients, but at the same time, it's building towards our longer term roadmap. And so just upfront and saying, look, like, we may not be able to fit all of your solutions in one place, that there was a mutual respect there to say, like, we understand that you're really going to own our core capital raising infrastructure, investment management, reporting, distributions, payments, etc. And like really us focusing there has given us sort of that, I'd say, just to the effect even to this day, that when we're interacting with clients, we're not trying to sell something that we're not, right? And that just gives us, it's a benefit of two things. It's one, it just keeps us extremely focused on the core product, and two, it just builds mutual respect with the client base. And I would say that just touched on the element that, I mean, even our client retention is virtually impeccable from day one. The same clients that we built the early product with are still with us to this day. And so again, that's it, kind of building on the point that we've been a core partner to their business.
Yeah. I mean, that's if you take that same ideology towards being an operator, it's a really great fundamental principle to operate off of. You guys have operated out the fundamental principle that we are going to do what we do very, very well. And we're not going to be for everyone, but we're not going to try to be. And take that to the GP side. We're always faced with the challenge of violating the terms of our buy box, for example, and things like that, because there are trendier deals out there right now, or we think we could raise more capital if we go into a different space or a different asset class or whatever it is. And we're tempted to chase the rabbit in different directions because we think we can get more capital in the door. And then what you end up is a portfolio that you're not doing anything very well because you don't have any specialty and you're not the best at what you do. But it's really hard to stay in that mindset of we're going to do these things and we're going to be okay if we're not the right investment partner for you. Because what you'll see over the long term is people are going to come back and they're going to invest with you multiple times if you're great at what you do. And that seems to be the philosophy that they've taken at InvestNext as well. It's very difficult to keep that mindset when you're in growth mode, though. Yeah. And so, Kevin, in the beginning, though, as well, what was that like to be able to stick to that core ideology when you have all of these different operators telling you what your product needed to be like?
Yeah, that's a great question. First of all, the conviction that we've always maintained as an organization, as a team, we are not going to sacrifice our focus for the sake of growth, right? And that's the optionality that we've built as a company. And to the effect that, again, it's just doubling down on your point, right? We're staying really focused, really builds that intentionality with the relationships that you have on the platform and your client relationships. I think that's just true in general across all business, but sort of the balance between, we recognize there's the practical balance of the things that clients are struggling kind of day to day, right? We're constantly thinking about what are the things that are just, call it death by 1,000 paper cuts, right? It's just these things that, so there's that part of sort of the prioritization, but the other thing is this the forward looking stuff, right? And so there's this internal mantra that we always have, which is, hold now in one hand and the future in the other, right? And that's actually, I mean, that's translated in terms of how we thought about how we break down our bandwidth when it comes to rolling out our weekly rollouts with cross features or capabilities that we're rolling on the platform. But the now is very much, hey, like we just had a client conversation and they're running a specific waterfall distribution, and that's actually matching up with 3 other cases we're seeing across the platform. That's a rapid iteration, rapid prototyping and rollout to the client base. So those are very specific examples of stuff that we're constantly iterating on. But the other thing is, it's sort of the, I guess, hold the future. And the other hand is very much around the stuff that we're seeing around the corner, right? And the example I would say there is just, way back in the early days, I mean, you'd consider that being able to transact payments through a platform, it's table stakes. You should be able, as an investor, you should be able to transact, call it, your $200,000 virtually instantaneously. Vice versa, as a GP, you should be able to distribute out your capital to your investors' capital base. But I mean, back, nearly 10 years ago, I mean, that was very much the status quo. Is go to the bank, you got make phone calls, make sure wire instructions are correct. And so no one was necessarily requesting those things directly, but they were describing symptoms of that underlying pain. And so for us, having these client interactions, we start to dig to the root of things. Is okay, well, we need to facilitate the underlying payments rails and banking across the platform. So that was a very kind of forward-looking thing that eventually would become ubiquitous across the space. But that's an example. I mean, the more recent example of things is, we're seeing a tightening regulatory landscape to the effect that, as our clients, including yourselves, are scaling up, the risk mitigation becomes extremely important to the business and the overall strategy. And so that's risk mitigation of who you're partnering with, the capital partners, the LPs that you're bringing on. And all of that sums up to a whole strategy that we've built out to say, okay, we need to maintain support and become, again, I say that word, infrastructure for our clients to be able to navigate the regulatory landscape, right? And one very specific example is, as of recently, we rolled out our enhanced KYC AML, where it's just the idea that you can verify all of the capital partners, investors that are involved in your fund or your offering, and that in itself is audit proof. So that, God forbid, the day may come where you get audited, you have that at the ready, you can deliver that, right? And that, again, no direct request for this. The regulations aren't there yet, but we know that's coming, and that tightening up is happening. So that was long-winded, but just kind of describing the philosophy of how we balance sort of the client interaction and the requests.
Love that. So, I think, given the age of InvestNext, you mentioned 2017, right? And as we sit here in November of 2024, the last 4 years has been very, very interesting across both the startup economy, right? Early stage company economy, as well as real estate, right? So you kind of go through the ZERP phase in 2020 to 2022, maybe even early 2023, where it was easy to go out and raise money for startups. It was also pretty easy to go out and raise money, or easier than it is now to go raise money for syndications and investment opportunities. And it's become wildly different in the course of the last 18 months. There was companies on the startup side that were, just plowing money into sales, thinking that the potential revenue growth on somebody's spreadsheet was going to outrun the capital that they were burning. And some made it and most didn't, right? Retrospectively. And there was a lot of syndicators that, bought deals way too high as things got very, very hot. And now, they're in survival mode. So like, how did InvestNext think about that time in the economy and how you were going to prioritize your customers? How are you going to control your growth? How are you going to avoid, shiny penny syndrome, and really stick to your values around product value and transparency?
Yeah, that's a great question. I think Yeah, it just goes back to from day one. I mentioned even at the introduction where we as a company, we bootstrapped for the better part of 3 years, and that's saying that we didn't raise any outside capital. We had to, before we raised our first dollar of capital or venture capital, we had the conviction on the unit economics and how that would pan out, especially on key areas of investment at the company. And so, we saw it as well in our space, right? To your exact point, it's in that sort of the prior to rate hikes. I mean, it was just crazy. And then whether it's venture, whether it's real estate, and we saw a lot of growth as a result of that. But at the same time, we were very, very cautious about that growth as well, in the sense that we did not want to overextend ourselves. We had the opportunity to really, to your point, plow money into sales, marketing, but that for us was we throttled that, and that was just preemptive of saying, hey, like, we want to make sure this is sustainable. We're not in a rush, right? We want to make sure that we're maintaining the same standards, whether it's client service, whether retention, et cetera. And that was super important for us, just from a general operating standpoint. And so, yeah, to that point, as we saw the world unfold, call it, we jump into end of 22, 23, things are really starting to take a turn in the industry. Thing is, our growth sustained solidly as it had been historically, right? Because we had already understood a really solid client base that had been extremely, we were pretty ruthless in qualifying our client base. And that's one of the key things, right? Is when we're thinking about our relationships with prospective clients is we are selective to that extent, where we can really understand the business, and we know it's a sustainable model, right? And that's what we really do our best there, to really get to know the client base. And so again, it's just like we're very fortunate that, in the sense that we are on a venture cycle where we raise capital, but we're never forced to raise it. We have optionality when we come to the table, because again, I think it communicates across even syndicating, right? Whenever you raise external capital, it is an element where you do take on risk. Raising external capital is an element of risk that you add to the business, because now you have external stakeholders that you're beholden to. And so, just long-winded to say that when we thought about that, we knew that raising capital would achieve a specific outcome for us and the investors. And so, to that point, that's kind of at least how we thought about it as a company. I think if I were to share more of the broader perspective on how we saw those years, even leading up to today, I mean, I think the general statement, and this is more anecdotal, but it's very much what I've heard, or the thread I've heard, is, so raising $1 today feels like, raising $5 compared to just a few years ago. And that's just the reality, right? Where today, sponsors, GPs, investors, there's just a greater degree of skepticism in the space, just given the current market conditions. And so the strategy here that we're seeing across the space is concerted investment into how we are operating. And again, this is more from the GP, the sponsor perspective, and the conversations we're having. Concerted investment in how we are operating and building trust with LPs, our existing portfolio of LPs and investors, which drives further growth in that investor base. And so that's technology, that's certainly personnel, but technology being a very key point of that. And so I know, kind of maybe getting ahead of myself, I think we'll be sharing one of our more recent research papers around 5 fundraising trends that we're seeing this year and next year as part of the podcast. But those are things that, again, we've illuminated, at least have seen across the whole client base.
Nice. Have you seen, I think we've seen from the GP side and networking and just talking to folks, that there was a very distinct difference now between operators, syndicators, and folks that just might have been really good at marketing and raised some capital over the last couple of years. So, whether you want to reference the white paper or the research paper or not, but what other types of changes is InvestNext seeing within your customer base, and how folks are surviving and finding ways to succeed?
Yeah, I mean, I think it's true in our world and in our business as a technology company. It's true across our client base, and it's kind of what you just alluded to, right? I think what we are seeing is, again, it sounds oversimplistic to say it, but it is the responsible operators that took a really hard look at how deals are done. Those are the ones that are thriving today, right? Again, and it's a simple statement, but it's really balancing yourself against a bit of like the hype in a sense, right? And we saw it on both sides, right? And so again, the ones that are doing well or sustaining have been those. It's just really thoughtful leaders in those organizations. And so I would say, and again, in reference to which will be outlined in the white paper, I think the biggest thing here is investor expectation the standards have been elevated, right? And because of that, I alluded earlier to the fact that trust is built with the very experience you have with those investors. And a big part of that experience is very much your technology and your, again, I say the word infrastructure around your investment firm, mm-hmm. right? And so investors have become accustomed to invest. They expect the institutional grade experience. They've mm-hmm. seen that in the public markets. They expect to see that in the private markets. And so the biggest trend there is investment in that stack and that infrastructure behind that. And again, just the nuanced experience of saying, hey, I found this offering. I have a clear understanding of the thesis. I'm going to place my dollars here. And then each point of that transaction communicates just another inherent level of trust that the investor says, okay, this is legit, right? Like we understand it. And then behind that, it's just the constant communication that comes after the fact that once the investor is committed. But I would say it sounds maybe coming from from the technology perspective, it sounds maybe cliche, but it is technology where we're seeing the biggest focus and investment.
I think that's huge because you could replace technology with, user experience. That's the expectation, right? And no matter how savvy an investor you are, how good a deal maker you are, how good your offerings are, you hit the nail on the head. The demand for a particular user experience isn't actually driven by comparable user experiences with other operators. It's driven by the user experience of other things in their lives, right? Like when I can pull up my Schwab app and just see everything that I'm doing, I have a certain ideology around how my user experience should be in managing my investments. And so you're not really just keeping up with other operators. You're trying to keep up with or match or even exceed the experience level that you're giving the consumer, your partners, your LPs, the users with your stack. I think that's so fundamental, and it's shown up on the InvestNext side in things, right? Like the pay rails and things like that, things that are now just like par for the course in the software space, but they really didn't exist even a decade ago. When you talk about holding the future in your hand, I don't want to derail the entire conversation. I feel like we do an entire other podcast about this. But when you talk about holding the future in your other hand, what's going through your mind right now over the next few years of what seems like an add-on now that might be table stakes in the future and might be, something that's required of the stack because it's something that other user experiences are giving?
Yeah, great question. I would say that probably the biggest first we start with challenges that we foresee our sponsors encountering it even now or into the future. So that's very much kind of it's very much our ethos, right? It's actually one of the core principles is around, product first. It's in this element of like ship value with every intentional rollout. And when we're thinking about ship value, it's like we are measuring against a key outcome that's going to drive, right? Whether it's saying, hey, look, we actually think that because of these 5 different rollouts, we're actually going to reduce the time for sponsors to raise capital from an average of 30 days to we can actually get that down to 15, right? I'm using that as an illustration purpose.
But you're thinking it's not just shiny toys.
Exactly. And so it's very intentional when we think about this. Now, the thing that today is, I called it out earlier, the thing that today is going to be hey, this is, we think this is a responsible thing to do and in good form is let's ensure that we remain in compliance, right? Let's call this like KYCAML as a specific thing. We think that's very much, as we look at the next 2 to 5 years, that's going to become a lot more, it's going to become a rigorous part of the ecosystem. And that's in 2 ways. The first is the regulatory landscape is going to be enforcing that further. Yeah. And that's just the reality of the private markets. We're already seeing that in adjacent industries such as crypto. But again, that's just the nature of the beast in terms of how these things roll. But the other thing is that, and which we alluded to, is that the investors in many ways set the standards over time broadly across the ecosystem. So I alluded to the fact that you have standards set in the public markets where to the effect that you have full trust in the underlying, whether you're trading on the New York Stock Exchange, right, NASDAQ, et cetera, like the trust is inherent already.
Or ordering off Instacart, right? Like, yes,
exactly. Right. So they're going to be driving a lot of that. And so we think that's a very good thing, right? There's going to be a healthy dynamic where accountability is established on both ends, where as an investor, you can verify that you're not going to be a bad actor or stakeholder into a fund or any other offering that you're putting together, which could certainly affect all the other stakeholders in that fund if they were a bad actor. So you have that accountability. But on the other side, the GP will further have that accountability by ensuring that the investors are going through that, call it that due diligence, right? And so you just inherently are going to build that cycle of trust. And again, I know it's a long-winded answer, but core to that strategy is where we're seeing that go over the next 2 to 5 years. It's just going to be a standard set in the whole industry.
So as you go with this product first mindset, right? And like you said, the last couple of years, raising $1 today feels like it's hard to raise $1 today. It feels like you're trying to get $5 out of $1, right? And are you guys forecasting the next several years from a growth perspective? Because as it's gotten harder to raise money, you guys have done an amazing job with client retention, 96% client retention, which is amazing. But future growth was probably projected to maybe be a little bit flat just due to the landscape. What are you guys kind of forecasting on that?
Yeah, we're a company that we've doubled year over year, right? That's just been our trend from day one. And I mentioned earlier that there have been investment opportunities to say like, we're going to dump a ton of marketing dollars, sales dollars. We're not beholden to that, right? And so it's just to emphasize the point of even regardless of where the markets are at, whether it's, hey, we have, a lot of capital being raised in the ecosystem, or whether, we're maintaining status quo, we've been through multiple cycles in this market, right? And so we're very comfortable with the growth rates. And to that point, it's that you kind of call it out, but for us, what's really matters is the core retention and us really building that partnership with the client base. So I mentioned again that we're very fortunate to be working with capital partners, our entire board of directors that have seen how we've scaled the company considerably, even in the span of the last 5 years, but to the extent of responsibly operating against forecasts, right? And so like, and I guess, this is more relatable to the venture kind of world, but I think it translates to even to this world. But it's just to say that when you have a board that's telling you like, yeah, we can really trust in your projections because you're actually on track every single time where you're thinking about your budgets and your forecasts. You already you build that trust with those stakeholders, right? And so, yeah, I guess call it there's a bit of the pragmatism, as maybe it's part of the being a Midwestern per se. We're very thoughtful about how we build a company, and when we talk about building a company, it's the people in that company to the effect that that comes first, right? We never want to sacrifice our people for the sake of risk and growth. And that's just been, again, that's our philosophy. And I think that's just played out very clearly in our success.
Amazing. You're a very principled leader, Kevin. I think you've touched on a number of them. I love the hold now in one hand and the future in the other. And, you hit on transparency a couple times. Leadership as a discipline fascinates me. And I think that the choice that you made to go into, software and startup and investments, right? And now you're dealing with, or you're kind of knee deep in an industry that's the polar opposite of how it was under 2 years ago. And you've still maintained apparent rigor and very disciplined approach to maintaining InvestNext's identity as opposed to needing to make some sort of strategic pivot. Super, super admirable, man. Really is. I think there's a lot of companies out there in startup land that, just make a hard left at one point and try and change the entire underlying identity of the company. And you guys have managed to stay very consistent and even better, right? So kudos to you and the team. But as we start to wrap up here, I guess my question is, existentially, right? How do you live and breathe the vision of the customer you serve into the company?
Yeah, that's a great question. Yeah, well, first of all, appreciate that. First of all, I'll mention that, however leadership is manifested, I think that is owed very much around the team that we've built here. And I mean, that's more across, the three founders, where there's just no ego to us. The reason we took on titles was, well, frankly, because there was a corporate guidance to do that. So, I took on CEO, but it never really mattered, or, it's the team is the team, right? So I think it's, we built a team where I look left and right. I'm like, I'm in awe of the talent. And so like, however I can help these people do their best, that's like, I think that's just what contributes to building a great team and a company. But to your point, I mean, how we live and breathe, I mean, well, first, I mean, we have an internal, call it a 12-page, you can call it a manifesto, right? But it's a document that everyone at the company consumes, and we often sort of discuss it. And as a company, we come together, right? And it's just to us saying there, where the long-term vision is very much creating access and democratizing the investing in real estate, right? And when you talk about mission statements, we're very aware that these things can sound, they can sound like fluff, right? And so the thing we've told the rest of the company is, look, everyone, we need to hold each other accountable to the thing we're doing over the long term. And if we're not, it's kind of our internal see it, own it principle, right? Like we hold each other accountable to that. And so that, for us, how we live and breathe that, I mean, it's we start at the why, right? Of why we started on this course. And that has guided us to this very day. The product decisions that we're making today have to match up to our strategy, which matches up to the mission, right? And that's outlined very, very rigorously internally in our document. But it's the thing that we're constantly measuring ourselves against. The last thing I'll mention there, it's, there's no perfect strategy that you can implement, right? And every day you're learning and you're iterating based on what you learn from executing against that mission. But for us, I mean, it's okay, right? Like when we do our quarterly planning, even our weekly plans, like we're constantly okay with iterating and learning along the way.
Love that.
Love that, man. Well, Kevin, I want to be respectful of time. This has been so fantastic to have you on to learn about your journey, everything that you guys are doing at InvestNext. Before we wrap up, any guidance, advice, just anything that you would leave our listeners with, whether they're operators in the space, whether they're just getting started, about this crazy industry that we operate in, the future, principles, leadership lessons, anything that you'd like to kind of impart on our audience?
Yeah, it's a good question. I guess I'll mention something that I think has been helpful to me. And I guess it's a little bit of what I just said a moment ago, but internally we use this, we call it the foggy river metaphor. And, the concept there is that, when you're embarking on anything, building an organization, whatever it is, right? There's an outcome that you're driving towards, right? So the foggy river metaphor is the idea is that, you're standing at the bank of the river and you can't really see in front of you. It's kind of hazy, but you can make out the other side. You can kind of see the tree line. You can maybe even see the hills beyond that. And so it's clear enough to you that you can make that crossing. And, the idea here is that you're only going to cross it by taking one step forward, right? And so the notion there's maybe there's a boulder in front of you. So you're going to set foot on that boulder. And then once you get there, you're going to negotiate what the next step is. And, maybe there might be some rock to the left or to the right, or maybe there's a down tree. The point there is just that it's kind of this balance of, looking right in front of you, where you're headed. You might veer off, but you're generally directionally going the right way. And so that's where you're constantly checking against that horizon. And so it's a long-winded metaphor, but just really to describe that's how we think about building a business or organization. Is that I just mentioned earlier that we are okay with kind of zigzagging, knowing that we might learn something, might not totally work there. We'll iterate, go back on course, but that's really just driving us, just constantly reminding us of what is that objective and how are we measuring incrementally towards that. And so that's again, it's a bit of a visual thing, but it's helped me in terms of how we analogize the work, but then even the team as we think about our planning, daily execution, and beyond.
The foggy river.
I like that one.
Yep.
We're gonna sit down and have a foggy river takeover conversation.
Yes.
The three of us.
Absolutely.
Crossing the foggy river. We can't take it over.
Yeah.
I love it.
Man, thank you so much, Kevin. This has been a blast. I really appreciate the time and getting to know you. Where can people connect with you on LinkedIn? Is that a good place to find you?
Yeah, LinkedIn's great. Yeah, feel free to connect with me there. I mean, I'm happy to share my email. My email is my first name at InvestNext. I get the privilege of having the first name at but yeah, that's.
We don't want to put you on blast there, so I appreciate it. I always ask. So Kevin at investnext.com. If you're an operator and anybody in the space, if you haven't checked out InvestNext, go to investnext.com. Fantastic product. We are satisfied customers beyond belief. It's a huge part of our tech stack. So thank you so much, Kevin. Again, go check out Tor Studios, TORE studios.com, deepbluere.com, the home of Deep Blue Capital, and create your investor profile over there. Got to have you back on at some point, man. We'd love to dive deeper. Really, really appreciate the time.
Yeah. Really,
likewise.
Cool to listen to how you think about things, Kevin. And honestly, what I was going to say before Brian tried to close us out was I feel like the way you think about things really comes through in the product. I don't think there's been a time where we've needed to uncover a capability, right, that wasn't there, right, and we just kind of needed to figure it out. The other thing I just want to mention to the listeners, this is not an InvestNext sponsored show. This is us tapping into the knowledge base of a very astute leader and entrepreneur. We Deep Blue Capital nor Tor Studios has received any money for this, and we just believe in the product and we believe in the vision that Kevin's brought to life. So I just wanted to mention that.
100%.
Awesome. Thanks a lot, Kevin.
Thank you guys. Really, really appreciate the chance to be on here. Thank you.
Absolutely. Episode 61 in the books. Appreciate everybody. We'll see you next week.